so many people started popping out of the woodwork over the last decade that consider themselves experts. Okay. But it was really easy to make money the last decade. And now that shit's hitting the fan, they don't know what the fuck to do. And I'm seeing all kinds of very poor advice being given out there to people. And I'm trying to tell people, you need to fucking be careful with who you're listening to right now, and you need to listen to people that have gone through situations like this and have experience dealing with these kind of situations, because you're going to get fucking hurt. Okay, so here's another interesting one. Hey, Dan, hope you're well. I wonder if you can share a story about your experience with recessions and how people's mentality changes during these times. Also, what can we do to provide more value to people Also, what can we do to provide more value to people or customers of our businesses? I'm assuming he means, during, potential recession. Okay, so first things first, number one, a recession is not what people have to be worried about. Yes, it is a downturn in the economy, but economies are cyclical. There's ups and downs all the time. What you have to really be worried about is a depression. So I keep on telling these people this, and it's unfortunate that the media is really fucking shoving recession down people's throats and trying to really seem like they're scaring people. But at the end of the day, what brings in the views? Negativity. So you have that. Second, how has things changed with respect to this recession, as well as what I witnessed back when I experienced the last one back in 2008?
I feel like it's very different.
What's that?
I feel like it's very different.
It is very different. Now, there's a couple reasons why I feel we'll get into the differences, and I'll tell you what I think is very interesting. So, okay, let's start in 2008. So 2008, what we saw at least in our area here, was the fallout from the automotive industry and the financial crisis dragging that industry down with it. Now, and that might have also been in relation to, people's desire to not buy new cars, and, who knows? I don't exactly know what that was. All I know is the financial crisis back in 2008 was produced from subpar mortgages that were being handed out fucking left and right, and anybody that arguably or didn't even have a fucking pulse. But it took down Windsor's economy because of the automotive sector. It was not because of the financial crisis. Now, nonetheless, regardless of the reasons why Windsor's economy was affected, the effects were still the same. Okay? So we had record unemployment. We had houses that were simply not selling. I was buying condos for $20,000. Nobody wanted to buy any kind of real estate. Everybody left and went to fucking Alberta to work. And Windsor was like a ghost town. I remember
that too.
Do you actually remember it?
Yeah, I was 15. Yeah.
Yeah, so, and that's when I started my real estate investing career and also the supplement business. The reason why I started in that time was because I dropped out of school and I was like, fuck this. It can't even get any worse. So if I can make it now, I can make it fucking anytime. Obviously I'm still here, so I obviously made it. But during that time, the fear in the market was unbelievable. Now, I don't remember prior to that. I wasn't involved in, this whole entrepreneurial game prior to, the 2008 financial crisis and that period of time. I remember starting in that time. And I think that was an advantage. The reason why I think that was an advantage was because I didn't go into it with the mindset of, holy fuck, I can't do anything. I got to be super careful. I can't make any moves because what happens if this gets worse? My mindset in the time was, how the fuck could it get worse? It was already so fucking bad. Okay? Now, there's so many different scenarios going on right now. You still have strong employment. I know it's starting to come down a little bit, but you still have strong employment. You still have a strong, you have decently strong economies, okay? They're still strong. You also have a major fucking housing shortage. The housing shortage still is unprecedented. And it's about to get worse. Why is it about to get worse? Because all these developers that recognize the fact that the best time to develop is on the upswing of the economy and the market, they stopped. Now they're not building anything. You have record projects right now stopped because interest rates are too high. So what's going to happen when all these people are coming into the country? All these people still want to buy homes. What's going to happen? We still have a fucking shortage of houses. That might be enough not to completely tank the market. I'm not saying the market won't completely tank, but what's it going to go down to again? Like seriously, you won't see condos for 20 grand. You're not going to see that. So what's it going to go down? It already went down 20%, 25%, maybe even 30 from its height. Okay, we're all living with that, right? But now the rates are what? 5.5%, 6%? From what? Within a year? 2?
2. Yeah.
Right? So they've gone up. How much? 3 times what they were? The rate shock's over. Even if the Feds keep increasing rates by half a basis point or 50 basis points, 75, the percentage of increase based on the rate is so much lower than the original rate shocks.
Yeah.
It really doesn't play that much more into from this point moving forward. Get what I mean? The initial shock is done. People are simply going to have to change what they're doing. They're going to have to, maybe they can't afford that, Range Rover lease payment, or maybe they can't go to Starbucks every fucking day anymore. Maybe they can't do that, or maybe they have to downsize a little bit. Or if shit really starts hitting the fan because the banks don't want to fucking be landlords, maybe what happens is the banks allow remortgage or refinancing at 35, 40 years, or even 30 years, because right now in Canada it's only 25. Maybe that starts happening. I'm already seeing shit in the States. What's going on in the States in terms of commercial lending, because rates are so high, is banks are extending out the interest-only payment term and allowing step-down prepay so that you can prepay the mortgage and buy it out at a fairly aggressive value, so that you can get into a new interest rate, so it doesn't stress the property long-term over time, because the banks know this is not a long-term situation. They fucking know it. So they know when you lock in for even say a 5-year, 7-year IO period, or even 10-year interest-only period, they know in 2, 3, max 5 years is what I'm hearing. Maximum 5 years. They expect everything to start coming down in 2 to 3 years. They know at that point in time, in order to be aggressive where everyone else is in the market, they know that they have to offer people creative ways to get out of that higher cost mortgage. They already know this.
Yeah.
I'm already being priced. I'm already having debt sized up where it's interest only debt for the entire term, and there's step down options for a buyout. So, for example, the 1, 2, and 3 year buyouts are very aggressive. If the rates start coming down, it's not gonna cost that much money to actually buy out the rate. So the banks already know what's happening. The banks know that this is not going to be a long-term thing. Follow the banks. Use the bank's level of caution to dictate where you put your money and what you invest in. If the banks don't like the deal right now, don't fucking do the deal. That's it. If the banks like the deal, especially now, all you got to do is, if you present a business plan to the banks, they like the deal and they like the plan, make sure you fucking execute on the plan. Because if you don't execute on the plan, then the fucking deal goes south. But if the banks like the deal and they're going to give you the money, the banks aren't in the business of losing money, especially right now. And the banks are still lending. The LTVs are shortened up a little bit. That's it. Right now, instead of getting like 75, I'm going to be like 70, 65, something like that. But nonetheless, they're still giving people money. They're still in the market for giving people money. So that's what I've seen has been different. Also, one of the major things that I think I would have noticed if I would have been in tune with the market prior to the 2008 crash, when I would have started everything, is the fact that so many people started popping out of the woodwork over the last decade that consider themselves experts. Okay. But it was really easy to make money the last decade. And now that shit's hitting the fan, they don't know what the fuck to do. And I'm seeing all kinds of very poor advice being given out there to people. And I'm trying to tell people, you need to fucking be careful with who you're listening to right now, and you need to listen to people that have gone through situations like this and have experience dealing with these kind of situations, because you're going to get fucking hurt. And one of the things that I'm seeing is a lot of people are starting to come and ask me, hey, Dan, what do you think about this property? This is what my realtor sent me. This is what's going on right now. Now, because how properties aren't moving like they were, realtors are trying to fucking force shit down people's throats. And you have to be really fucking careful. Some of the stuff that people are asking me advice on, I wouldn't fucking touch it. Never mind a 10-foot pole, a fucking million-foot pole. And it's being pushed down people's throats by the realtors. You need to be really fucking careful, and you need to listen to people who have been through this with personal experience. I'm not trying to say listen to me, because I have the experience and a personal experience of going through something like this. I don't fucking care if it's me or someone else. You need to listen to people that have been through this kind of shit, because if they haven't, they're not going to understand how to navigate it, right? And this is why I've always told people the most important thing at this point right now is, number one, you do not buy anything on a speculation unless you have the fucking money to back it, okay? And number two, you buy cash flow. Right now, and you've seen this, you've done research on this in times of recession and 2008 or whatever, rents didn't actually really move that much, if at all. The only places that rent came down was in transient places and vacation areas.
Short-term rentals that are in more like luxury places.
Exactly.
That are more expensive, Class A.
Exactly. So that's another thing too, top end of the market, Class A, stuff like that. When the economy downsizes, you're going to have less people at the top. Well, the people at the top require Class A type of amenities and luxuries and living accommodations, things like that. You're probably going to want to stay away from that. You're going to really want to be in the B class, right? A will come down to B. B won't necessarily go down to C, because B is still affordable. In good times, C will go up to B. Yeah. Right? So you'll always, the B is where you want to be, the B class type properties. And that's it. That's what I've seen that's different. So